Hello traders, and welcome back to another video on the channel. So in today's video we're going to be discussing what my trading anchor for each trading session has been over the last 3 to 5 years of trading, and it is going to be discussing the importance of the midnight open. So when trading, we always have 3 moves inside the market. We will always get an accumulation phase, which a lot of people, and I personally see the Asian session as this accumulation phase. We then have the manipulation phase of the day, which is usually inside London session. And then finally, in New York, we usually have distribution. And that is simply because we have the most trading volume and liquidity inside the market in the New York trading session, just due to the amount of money flowing in and out of the market and people taking on and off positions. So the importance of the midnight open in all of this is basically going to be something like this. This is our accumulation phase of the market. What then usually happens inside of London, we will come and take out Asian low, like something like this. So this is our manipulation phase of the market. We can then use midnight open as our anchor and understand that at this price is seen as a discount on the day, because when Asian session traders were in the market and London session traders were in the market, they were buying a price higher than the midnight opening price. So New York traders can then take advantage of this by opening heavy buy positions right below midnight open. So this line is basically going to give us premium and discount inside the market, depending on where we're at when New York opens. So how I personally trade this, I will look on my chart and I will see if order flow is currently bullish and my daily bias is bullish. In a scenario like this in New York, this midnight open is acting as a huge trading anchor for my day, because any positions I get inside of here, I'm buying at a discount to then potentially take out any Asian session liquidity and any London session liquidity, going alongside with our daily buyers. So as long as the market's trading in a bullish fashion, this will be the anchor of the day for me to get my buy positions below this level. I'm going to show you some examples of this, and it works both ways. We then also have the bearish side. So you have Asian accumulation. London will then phase above midnight open. And then in midnight open, if market is bearish, we can then look for a trade back down into the Asian lows. But we always want to ensure that we are trading with the trend, and we are only ever taking a trade above midnight open if we're bearish, and below if we are bullish for our daily bias. And that is how we're going to increase our win rate. So let's dive into some examples. So today we had this nice GBP USD trade, and currently this is a trade that we have going on inside of the Discord. Over 700 people now inside the Discord. There is 50 spots open for a 7-day free trial, and you will get all my exact trades. As you can see, inside of London, we manipulated the market and we took out Asian lows, and we also took out Monday lows. What we can then do is understand that anything below this midnight opening price line is at a discount for the day. We then have a clear objective over here, which is our 15-minute high. And as you can see, we have started to print bullish on New York open. And that is simply because we were underneath our anchoring price of where price will want to redistribute back into the accumulation phases of the Asian session. So we had manipulation, we had price come into a 4-hour FVG, a zone that we like to see price bounce off, and then obviously anything under this midnight opening price line is buying at a discount for the day. So we are hoping to reach our target. I will make a full trade breakdown discussing this trade because it was very nice, and we've also added a scaler off our midnight opening line. So the midnight opening line will also act as a point of resistance when the market tries to trade through and around it, just because we have so many swaps and daily positions that were either closed or opened at that point. So another example of this, so we had central bank dealing range open up like so. We have then spiked central bank dealing range highs out and this high out within central bank dealing range, meaning liquidity has been taken from the top. What we can then understand is price may want to then come down and take our sell side liquidity, which is this low down here. And as you can see, this would have been our entry just because we are selling price from a premium standpoint. So we do not want to be selling underneath our anchor of the trading day if we are bearish on this certain day, which we were today, because we have taken buy side liquidity, obviously have reached into a favorable level all the way across, taken many points of liquidity. We've then decided to sell off, close through fair value gaps. So at any point, we do not want to be taking a trade underneath this line, because what happens when you do take the trade underneath this line? So here we have a perfect example of a 15-minute FVG that for the same trade, we would have been stopped out before price goes lower. And why is that? Because we weren't above our anchor of the trading day. And this is why it's so important. So this, in hindsight, would have been a nice setup, but it wouldn't have, because you would have got stopped out, because you're not selling where the institutions are selling from. You're selling from where the retail traders are selling from. So this anchor here is showing us where the institutions are going to place their orders above or below this level. So if we had then waited for this and price stops above this high, which had taken liquidity, which is the clear high to cover in this circumstance, we could have caught a nice 3% trade today. And that is simply just trading around our midnight opening price. If you do want to find out more about the midnight opening price, make sure to join the free Discord in the link in the description. And other than that, I will catch you all in the next video, where we will be discussing how important the weekly open is for market bias and market sentiment. Other than that, I'll catch you in the next video, and peace.